Okay, I hope you guys went through the material here. As I've indicated that tonight we'll be focusing on the fixed assets management. This topic, it will come either in your paper one or in paper two, but then if the examiners prefer, they can bring it both in paper one and paper two. Okay, so I believe that you went through the theory, you had enough time to go through the theory. So because of time constraints, I won't go through the theory with you. Then let us go straight to the activity. And remember, last time I did the theory for depreciation with you. I also explained how you can calculate it if there is new asset, if there is an asset that is being disposed, or if maybe there is an asset that has outlived its useful life. That's when we'll be able to apply the 1 rand value or the 1 rand rule. Okay, so let's just go straight to the activity, and I hope that you wrote it as well on your side. And let me just do the calculator here. Okay. I hope you can all see. Okay, activity one. They're saying the name of the business, it's Box Meat and Chicken Ltd. Then they're saying the information provided relates to Box Meat and Chicken Ltd. Then we're being told that they apply a markup of 40% on cost and that their financial year ends on 30 June each year, meaning that each year their year will be ending on 30 June. Then we are being required to prepare the asset disposal account of the sold vehicle, and also to complete the fixed asset note, and also to complete the non-current assets section in the statement of financial position. Okay, so let me do this since I don't have the answer book for the asset disposal. Okay, now remember, before you can start completing your work or before you can start writing, it is very important that you try as much as you can so that you can go through the information that is presented to you. By doing that, you'll be making some form of sense while you read the information that lies in front of you. So here on information A, we are being told that this is an extract from the pre-adjustment trial balance on 30 June 2023. And then we are having the land and buildings, which amounts to 500,000. And we are having vehicles, which amounts to 400,000. And we are having equipment, which amounts to 290,000. And we also have the accumulated depreciation on the 1st of July 2022. Now, this will be the accumulated depreciations at the beginning of the year. We also have the accumulated depreciation on vehicle, which is 150,000, and that for equipment, it's 50,000. Then furthermore, we are being told that there is a fixed deposit at Leaders Bank. Then we're being told that the interest on fixed deposit is 12% per annum. Then the interest on the fixed deposit, I mean, it's currently standing at 180,000. Then on the first Roman figure, we are being told that a new property, which is land and buildings, was purchased for 300,000 on the 1st of May 2023. then we are being told that this was not recorded in the books of the business. Now, this means that the 500 that is appearing here on the trial balance will be the cost of the land and buildings at the beginning of the year. Then Roman figure number 2, we are being told that vehicles with cost price, not vehicles, but a vehicle with a cost price of 100,000. It was sold for 71,000 cash on the 31st of December 2022. Now here, if you notice something, this vehicle, it was sold during the year, meaning that it is not going to be depreciated for how many months? For 12 months, but then it will be depreciated from the beginning of the year up until the date it was disposed. Then we are being told that the accumulated depreciation of this vehicle when the year started, it was 30,000. Then we are being told that no entry has been made in the books of the business. This means that the cost of the 400,000 in the trial balance, it represents the cost of the vehicles at the beginning of the year. Okay, then Roman figure number 3, we are being told that on the 1st of April, additional equipment was purchased from Johnny Traders on credit, which amounts to 40,000. Then we're being told that this has been recorded. Now, when they are saying this has been recorded, this means that the equipment of 290, it represents the cost of the equipment at the end of the year. Then the 40,000 has already been included. Okay. Then Roman figure IV. Then they are saying depreciation is accounted for as follows. Then for vehicle, they're calculating it at 10% per annum on the diminishing balance method. Then for equipment, it's at 15% per annum on the cost method. Then information V, we're being told that a fixed deposit at Leaders Bank will mature as follows. Then the first one will mature on the 31st of May 2024, then which is the 80,000. Then the rest, which is the 50,000, it's maturing on the 1st of April 2025. Now, if you notice something, the first one which will mature, the one for 80,000, which will mature on 31st of May 2024, it's for the next financial year. Remember, when we prepare the statement of financial position, especially under the financial assets, if we have any fixed deposit that matures in the next 12 months or in the next financial year, we have to subtract it from the fixed deposit. Thereafter, we have to record it under the cash and cash equivalents. Okay, then now we can start. Remember, we are being told that we should prepare the asset disposal account. So let's start with the asset disposal account. So I'm going to say asset disposal. So we're going to have the debit and we're going to have the credit. Now remember, on the debit side of the asset disposal account, the first thing that you have to write, you should write whatever fixed asset is being disposed. Now, in our case, the business is disposing an old vehicle, meaning that the vehicle that will be disposing will be recorded under the asset disposal. So here we're going to say vehicle. Then now, next thing is that you have to write the cost price of the vehicle that is being disposed. Now, in our case, the cost price of the vehicle that is being disposed, it's 100,000. So here, I'm going to write 100,000. Okay. Then on the credit side of the asset disposal, you have to write the accumulated depreciation on vehicles. Accumulated depreciation on vehicles. Now, the first amount that you should write the accumulated depreciation of this disposed vehicle at the beginning of the year. Now, if you notice something, we are being told that the accumulated depreciation of this vehicle was 30,000 on the 1st of July. This is the beginning of the year. So we are going to start with it. So we're going to say 30,000. Okay. Now, for us to be able to complete our asset disposal and for us to be able to calculate the disposal at carrying value or the carrying value of the asset that we are disposing, we first have to account for the depreciation for the year of this particular asset that is being disposed. Now, one thing that you have to consider is that the asset that we are disposing, we are disposing, it did not spend the entire year, meaning that its depreciation is not going to be for the rest of the year, but then it will be based from the beginning of the year up until the date in which it was disposed for. So let us start calculating the depreciation. One thing that you have to remember, it is the method that is being used to calculate depreciation for vehicles. Remember, we are told that the depreciation on vehicles is calculated at 10% per annum on the diminishing balance method. Already, you know that when they are using the diminishing balance method, the formula, if maybe we are disposing the asset, the formula will be the cost. Then we're going to subtract the accumulated depreciation. That'll give us the carrying value at the beginning of the year for the disposed vehicle. Then we're going to multiply that by the rate. Then again, we're going to multiply that by the X over 12. Now, the X will represent the number of months that the asset was available for since the beginning of the year up until the date in which it was disposed. So now let us start drafting our timeline. Remember, the year is ending on 30 June 2023. It means that it has started on the 1st of July 2022. Then remember, again, we are being told that the asset, it was disposed on the 31st of December. So the last date for depreciating this will be 31st of December 2023. 2022, I mean, not 2023. Okay. So for us to count the number of months that this asset was available for, we're going to start from the 1st of July up until the 1st of December 2022. So it will be July, August, September, October, November, and December. Let's count again. It will be July, August, September, October, November, and December, meaning that our vehicle, we're going to depreciate it for how many months? It will be 1, 2, 3, 4, 5, 6, meaning that our X here, it will be 6 months. So now let us calculate the depreciation of this disposed vehicle. So remember, the cost of this disposed vehicle, according to our asset disposal and according to the information, it's how much? It's 100,000. So we're going to say 100,000. Then next up, we have to subtract the accumulated depreciation of this vehicle at the beginning of the year. Now remember, according to the information, the accumulated depreciation at the beginning of the year, it was how much? It was 30,000. So we're going to subtract 30,000. Then next up, we have to multiply that by the rate of the depreciation. Then remember, they are calculating it at 10% per annum on the diminishing balance method, meaning here we're going to say multiply by 10 over 100, or you can simply write 10%. Then now we're going to multiply that by what? By the number of months the asset was available for since the year started up until the date in which it was disposed. Remember, the asset was only available for 6 months. So here we're going to depreciate it for 6 months. Hence, we are writing 6 over 12. Then next up, we're going to find the carrying value at the beginning. So it will be 100,000.
Phezulu ngoba ufuna ubuya phezulu. Ngena endlini. Yes. Awumazi usuke ehlaleleni.
Can you hear me now? Sorry about that, guys. Just at the time I was muting everyone, I forgot that on my other device, I'm not the host. But then I'm sorry. Can you hear me now?
Yes, sir, we can hear.
Okay, thank you. And my apologies, guys. I wasn't aware. I thought maybe since I got the controls on my side, I was still audible. My apologies. Okay, so let me explain how I got certain figures here, just to make you guys understand. So let me just do this. Or let me just do this. Then I'll just explain how I got these figures here. Okay. So first of all, on the asset disposal account, I started by recording the cost of the vehicle on the debit side. Then after I started with the accumulated depreciation at the beginning of the year. Then the next thing that I did was to calculate the depreciation for the year of this particular disposed vehicle. And remember, for us to calculate depreciation of a disposed vehicle, since it was disposed during the year, it means that we are not going to depreciate it for the entire 12 months, but then we're going to depreciate it starting from the beginning of the year up until the end, not the end, but then up until the date in which it was disposed for. Now, if you remember, the year it started on the 1st of July, then this asset, it was disposed on 31st of December 2022. So when we are going to count the number of months that we're going to depreciate this for, it will be from the 1st of July up until the 31st of December. So it will be July, August, September, October, November, December. Meaning that we are going to depreciate this for how many months? For 6 months, from July up until the 31st of December. So remember, the depreciation method that is being used to calculate this particular depreciation, they are using the diminishing balance method. Now, since we are disposing a fixed asset, it means that the formula will be the cost minus the accumulated depreciation. Then we're going to multiply that by the rate. Now, since our fixed asset did not spend the whole year in the business, then we're going to multiply that by the X over 12. Now, the X will represent the number of months the asset was available for. Now, we just determine the months, and it's 6 months. So when we calculate depreciation, we're going to substitute the formula. Then it will be the cost, which is 100,000. Then we're going to subtract the accumulated depreciation of the disposed vehicle at the beginning of the year, which was 30,000. Then after, we're going to multiply that by the 10 over 100. Then after, we are going to multiply that by 6 over 12. Now, if we take the 100,000 and we subtract the 30,000, it gives us 70,000. Thereafter, I took the 70,000, I multiplied it by 10 over 100, then I multiplied it by 6 over 12. Then I got the depreciation of this particular disposed vehicle, which is 3,500. Then I returned back to my asset disposal. Then I added back the 3,500 so that I can determine the total accumulated depreciation of the disposed vehicle at the date of disposal, which amounted to 33,500. So after that, I recorded the exchange. Remember, it was disposed, it was sold for cash, 71,000. So I came here and I recorded the bank. Remember, if they are selling it on credit, you have to write the debtors control. But if they are trading it in, then you are going to write creditors control. So now, since they are selling it for cash, I wrote bank, then I wrote that the exchange amount is 71,000. So now I had to determine the bigger side first. And now the bigger side is the credit side. So I took the 33,500 and I added it with 71,000. Then that gave me 104,500. Then now, since the credit side is 104,500, it means that the debit side will also be the same. Hence, the debit side, it has a cost of 104,500. Then now, since I wanted to determine the profit amount, I took the 104,500, then I subtracted the 100,000, and that gave me the profit on sale of vehicle of how much? Of 4,500. Then next up, I wanted to show you that there are two ways in which you can calculate the profit or the loss that results from disposal of a fixed asset. Now, the first one was that if you took the disposal at carrying value and you subtract the exchange amount will be the 71,000. That is what it was sold for. Then the disposal at carrying value will be the cost at the beginning. Then you would subtract what? The total accumulated depreciation at the date of disposal, which was 33,500. Now here I said, if you're using the first approach, then if you get a difference, a negative difference, then that is a profit. But if you get a positive difference, then that is a loss. Okay. Or you can use what? You can use this method whereby you start by recording the exchange amount. In our case, it's 71,000. Then you subtract with the disposal at carrying value or the carrying value of the disposed asset. Then now remember, here the exchange amount was the 71,000. So now I had to calculate the disposal at carrying value. So I took the 100,000, then I subtracted the total accumulated depreciation at the date of disposal, which is 33,500. Then that gave me how much? It was something around let's see, 100,000. Then I subtract 33,500. It was 66,500. So now to find the profit and also to confirm the profit in my asset disposal account, I took the exchange amount, which is 71,000, and I subtracted 66,500, and that gave me the same profit of 4,500. So that is how I calculated it. And remember, the 3,500 that we calculated here, it will help us to calculate the total depreciation expense for what? For vehicles. Then the 66,500, it will be the disposal at carrying value. So now I was just on the fixed or tangible asset note, the second requirement. So here I was saying that under this one, we're going to start with the column for land and buildings. Remember, for land and buildings, to find the carrying value at the beginning, we are not going to have any form of accumulated depreciation because land and buildings in your level, they do not depreciate. So it means that the cost at the beginning will be the same as the carrying value at the beginning of the year. So it will be 500,000. Okay. So now I have to do what? Now I have to record the movement of the land and buildings. Now, if you remember on the first Roman figure here, they said that new property, which is land and buildings, was purchased for 300,000 on the 1st of May 2023. Then they are saying this was not recorded in the books of the business. Now, in my fixed asset note or the fixed or tangible asset note, under the additions, each time we acquire additional land and buildings, we're going to record that in the additions. So remember, they are saying that the new property, it cost 300,000. So under additions, I'm going to write 300,000. Okay. Now I want to find the cost of the land and buildings at the end of the year. To find the cost of land and buildings at the end of the year, you are going to say the cost at the beginning of the year, then you are going to add it with the additions, and that will give you the cost at the end of the year. So in other words, we're going to take the 500,000, which is the cost at the end, at the beginning of the year, then we're going to add it with the additions or that particular new property that was purchased during the year. So it will be 500,000, then we're going to add it with 300,000. That gives us cost at the end of how much? Of 800,000. This one is the easiest of them all. Everyone can get this one right. Now remember, land and buildings do not depreciate. In other words, for accumulated depreciation at the end, we are not going to write anything. Now the cost at the end of the year will be the same as the carrying value at the end of the year, which will be 800,000. Okay, then now let's focus on the vehicle side. Before we do anything else, it is very important that we try to calculate the carrying value of vehicles at the beginning of the year. Remember, the formula to calculate carrying value is the cost at the beginning, subtract the accumulated depreciation at the beginning. So for vehicles, to find the carrying value at the beginning for vehicles, we're going to say 400,000, then we're going to subtract 150,000. And that'll give us carrying value of how much? Of 250,000 at the beginning of the year. Okay, then now we can refer to other information. Remember, for vehicles, we're told that there were no additional vehicles. However, some of the vehicles were disposed. So now we know that under additions, we don't have anything. But under disposal at carrying value, we know that earlier on we calculated the disposal at carrying value, and it was 66,500. If you don't know how we got it, we took what? We took the 100,000, which is the cost of the disposed vehicle. Then we subtracted the total accumulated depreciation at the date of disposal. I can show you again. We took the cost of 100,000. Then we subtracted the total accumulated depreciation of that vehicle at the date of disposal, which was 33,500. And that gave us the disposal at carrying value, or the carrying value of how much? Of 66,500. So here we're going to say 66,500. And again, your disposal at carrying value should be in brackets. And again, we should not forget that depreciation that we calculate for what? For the disposed vehicle. So now let us calculate the depreciation of what? Let us calculate the depreciation of our old or the remaining vehicle. So let's just do it here. Depreciation of remaining vehicle. So to calculate the depreciation of the remaining vehicle, you can start by separating the costs, whereby you're going to say the cost of the remaining, it will be the cost at the beginning, subtract the cost of the disposed vehicle. So it will be 400,000. Then we're going to subtract 100,000, which is the cost of the disposed vehicle. Then that'll give us how much? It will give us the remaining cost of how much? It's 400,000. Then we subtract 100,000. It gives us how much? It gives us 300,000. Okay. Then next up, we're going to separate also the accumulated depreciation at the beginning. So we're going to take the total accumulated depreciation at the beginning of 150,000. Then we're going to remove the accumulated depreciation at the beginning of the year of the disposed vehicle, which is 30,000. So we're going to subtract 30,000. That'll give us how much? That'll give us, let's see, 150,000. Then we subtract 30,000. That gives us 120,000. So now using this, we can calculate depreciation. Remember, they are using the diminishing balance method. And the formula for calculating depreciation using the diminishing balance method, it's cost at the beginning minus accumulated depreciation at the beginning. Then we're going to multiply that by the rate. So remember, the cost of the remaining vehicle, it's 300,000. So we're going to say 300,000. Then we're going to subtract 120,000. Then we're going to multiply that by what? The rate of depreciation is 10%. So we're going to multiply that by 10 over 100. So let's see how much it gives us. So it will be 300,000, subtract 120,000, then multiply by 10 over 100. it gives us 18,000. Now that means that the total depreciation for the year, it would be how much? It would be 18,000 plus what? Plus, remember, do not forget the depreciation that we calculated earlier on, the depreciation of the disposed vehicle, which is 3,500. And that gives us how much? 21,500. So under depreciation, I'm going to record 21,500. Okay. So now using this information, we can calculate the what? We can calculate the cost at the end and also accumulated depreciation at the end. So to find the cost at the end, we're going to say cost at the beginning, we're going to add additions, then we're going to subtract the cost of the disposed vehicle. So since we don't have any additions, it means we're going to put 0. So it will be 400,000. Then we're just going to subtract the cost of the disposed vehicle, which is 100,000. And that gives us cost at the end of how much? Of 300,000. Okay. Then next up, we have to do what? Next up, we have to determine the accumulated depreciation at the end. So to find the accumulated depreciation at the end, we're going to say accumulated depreciation at the beginning plus depreciation for the year. Then we're going to subtract the accumulated depreciation of the disposed vehicle. So it will be how much? 150,000 plus depreciation for the year, which is 21,500. Then we're going to subtract the total accumulated depreciation of the disposed vehicle. Remember, we determined this the time we're preparing the asset disposal account. So we're going to subtract 33,500. That gives us how much? 138,000. So we're going to have 138,000. It has to be in brackets. So now to find the carrying value at the end, we're going to say 300,000. We're going to subtract 138,000. That gives us how much? That gives us 162,000. Another approach that you can use is that you can just use the carrying value at the beginning of the year. Then you subtract the depreciation and also the disposal at carrying value. That'll give you the carrying value at the end of the year. So let's try it. So it can be 250,000. Then we subtract 66,500. Then we subtract 21,500. It gives us the same 162,000. Okay, now let's focus on equipment. Now you have to remember that for equipment earlier on, we're told that an additional equipment was purchased from 20 traders. Then we're being told that it was purchased on credit for 40,000. Then they're saying this has been recorded. This means that the 290,000 that is appearing here, it is the cost at the end. So now under additions, I'm going to record 40,000. Now remember, to find the cost at the end, you're going to say cost at the beginning plus cost of the new asset minus the cost of the disposed asset, and that'll give you the cost at the end. So now we have the cost at the end, we have the additions, but we don't have the cost at the beginning. So we can just twist the equation around. So in other words, it will be 290,000. Then we're going to subtract the 40,000, and that'll give us 250,000 as the cost at the beginning of the year. So now to find the carrying value at the beginning of the year, we're going to say the cost at the beginning, then we're going to subtract the accumulated depreciation at the beginning. So it will be 250,000 subtract 50,000. And that gives us how much? That gives us 200,000. Okay. So next up, we can use the information to calculate the depreciation as well. So let us calculate depreciation for equipment. So I'm going to say equipment. So first of all, remember for equipment, we have two equipments. We have the existing and we have the new. So let us start with the new equipment. Now, when it comes to calculating depreciation of new fixed asset, it doesn't matter whether the business is using the diminishing balance method or the cost method. So depreciation for new fixed asset will be calculated at cost. So depreciation will be what? Will be equals to cost multiplied by the rate. Then we're going to multiply that by the x over 12. Now remember, our fixed asset, which is equipment, it was purchased during the year. So when we're going to depreciate it, we're going to start from the date in which it was purchased up until the end of the year. Remember, it was purchased on the 1st of April. So we're going to depreciate it from the 1st of April up until 30 June 2023. So now let us count the number of months. So it will be April, May, June. So we're going to depreciate it for 3 months, meaning that our X will be 3. So now here we're going to say cost, which is 40,000. Then we're going to apply the rate that is being used for equipment, which is 15%. So we're going to multiply that by 15 over 100. Then again, we're going to multiply that by 3 over 12. Let's see how much it gives us. So it's 40,000 multiplied by 15 over 100. 15 over 100, then multiply by 3 over 12. That gives us 1,500. 1,500 is the depreciation of the new equipment. So let us calculate the depreciation of the old equipment, which is the existing. And this one, we're going to calculate it based on what? Based on the cost at the beginning. And remember, earlier on, the cost at the beginning, it was 200,000 here. So it means we're going to say 200,000. Then we're going to multiply that by the rate, which is 15 over 100. It gives us how much? So it's 200,000 multiplied by 15%. Then it gives us 30,000. Then total depreciation will be the 1,500 for the new plus the 30,000 of the existing equipment plus 1,500. That gives us 31,500 as the depreciation of what? Of equipment for the year. So here we're going to write 31,500. Let me use bigger pen. So it will be 31,500. Then it has to be in brackets. Okay. Then now let us calculate the what? The accumulated depreciation at the end. To find the accumulated depreciation at the end, for this one, we're going to say accumulated depreciation at the beginning, then we're going to add the depreciation for the year. So it will be 50,000 plus 31,500. That gives us how much? 81,500. It has to be in brackets. So now to find the carrying value at the beginning, we're going to say 290,000. Then we're going to subtract how much? 81,500. That gives us 208,500. Okay. Now using this information, we should be able to calculate the total carrying value at the end of the year. So now we can start with the carrying value at the beginning up until the last end, which is the accumulated depreciation at the end. So for the total carrying value at the beginning, it is going to be 500,000 plus 250,000 plus 200,000, which is 950,000. Then the total costs will be what? Total costs will be 500,000 plus 400,000 plus 250,000. and that gives us how much? 1,150,000. Okay, now to find the total accumulated depreciation, it is going to be 150,000 plus the 50,000. That'll give us 200,000. Then next up is to find the total additions. So it will be 300,000, 300,000 plus 40,000. That gives us 340,000. Then now the total disposal at carrying value will just be 66,500. Okay. Then next up, to find the total depreciation, it will be how much? It will be 21,500 plus 31,500. That gives us how much? 53,000. Okay. Now to find the total the total carrying value at the end, so it will be 800,000 plus 162,000 plus 208,500. That is how much? 1,170,500. Then now to find the total cost at the end, it will be 800,000 plus 300,000 plus 290,000. And that gives us how much? 1,390,000. Okay. Now to find the total accumulated depreciation at the end of the year, it will be 138,000 plus how much? Plus 81,500. That gives us 219,500. Remember, it has to be in brackets. So when we prepare the statement of financial position, we're going to consider only the what? We are only going to consider the carrying value at the end of the year, which is how much? Which is 1,170,500. So here under the statement of financial position, under the non-current assets, in the fixed or tangible asset, I'm going to write 1,170,500. Okay. Then in terms of our financial assets, before you can do anything else, the first step will be to open the bracket. Then the second step will be for you to record the amount from the trial balance, which is 180,000. So we're going to say 180,000. Then next up, we have to look for information that will affect our fixed deposit. So remember, we are told that fixed deposit at Leaders Bank will mature as follows. The first one will mature on 31st of May 2024, which is 80,000. Now the 31st of May 2024, it is within the next financial year. It is within the next 12 months. So this one we have to subtract it here since it's maturing. So we're going to subtract 80,000 here. Then that'll be how much? So we're going to say 180,000. Then we're going to subtract 80,000. That'll give us how much? 100,000. Now to find the total what? To find the total current assets, we're going to look at the fixed asset, then we're going to add it with the financial assets. So it will be 1,170,000. 1,170,000, then 500. We're going to add it with 100,000. That gives us how much? That gives us 1,270,500. Then that's how we should do it. Okay, so guys, something that just came up. I just want us to stop right here. Then can we also resume this one? Can we do the second activity tomorrow, please? If you don't have any question, can we do the second activity tomorrow? I am about to have a class, so I have to go attend to it right now. Can you complete the second activity on your side? Then we can do the part 2 of it tomorrow. If you don't have any question, then we can end here. Any question? Hello? Is there anyone with a question? Wonderful section. We will surely do so. Okay, thank you there. Thank you there. Thank you there. So if there is no question, then we can just end the lesson right here for the night. Then we can resume with activity 2 tomorrow. Ne? Thank you there, Samsung A21. Thank you there, guys. Enjoy the rest of your evening. Good night.